Over 180,000 people lost their jobs last year. The headlines told a simple story. AI did it. Companies announced layoffs alongside press releases about their bold AI transformations. Salesforce, Accenture, Klarna, one after another, they blamed the machines. But here's the thing nobody is talking about. The AI they're blaming isn't actually working. So if the technology isn't replacing workers, why are so many people losing their jobs? The answer is uncomfortable, and it might just make you furious. This story everyone believes. There's a narrative you've probably heard 100 times. AI is eating jobs. The robots are coming. Every headline reinforces it. Companies cutting thousands of positions, blaming automation, blaming artificial intelligence. It sounds like a technological revolution, like we've entered a future where humans are no longer needed. The message is everywhere, and it feels inevitable. But when you actually look at the data, something doesn't add up. The contradiction. Let's start with a simple question. If AI is truly replacing workers at scale, then the companies investing most heavily in it should be seeing massive productivity gains, right? They're not. A major study examined hundreds of AI deployments across industries. The findings were striking. The vast majority of companies investing in AI are getting exactly zero measurable return on investment, tens of billions of dollars spent, and almost nothing to show for it. Zero return, no profit increase, no productivity boost, nothing. Yet, at the same time, layoffs are mounting. Over 180,000 tech workers lost their jobs last year. That's nearly 500 people every single day receiving the same news. So here's the contradiction. Companies are spending fortunes on technology that isn't delivering value, and they're firing workers while claiming that very technology is the reason. If the emperor has no clothes, why is everyone pretending otherwise? The AI excuse economy, Oxford researcher Fabian Stephanie has a name for what's happening. He calls it the AI excuse economy. His research points to something uncomfortable but obvious once you see it. Companies are using AI as a scapegoat. Instead of admitting the real reasons for layoffs, they wrap their cost cutting in the language of innovation. Think about it from a CEO's perspective. Option 1, tell investors you're laying off thousands of people. Because you overhired during the pandemic bubble, your growth projections were wrong, and now you need to make quarterly earnings look better. Option 2, tell investors you're undergoing a strategic AI transformation and eliminating positions as part of your forward-looking digital evolution. Same number of people lose their jobs, same cost savings hit the bottom line. But one narrative makes leadership look incompetent. The other makes them look visionary. Which one do you think gets chosen? The data backs this up. Research from the New York Federal Reserve found that only 1% of service firms reported laying off workers due to AI in recent months. Yet layoffs overall have remained high. If AI isn't causing the layoffs, something else is. The reality behind the headlines. Let's look at some of the biggest AI layoff stories and see how they hold up under scrutiny. Salesforce made headlines when they cut thousands of customer support roles. The CEO confidently stated that AI could handle half the work. But when reporters dug deeper, they discovered something interesting. The company's own spokesperson later admitted that most of those workers were simply moved to other departments. They weren't replaced by AI, they were redeployed. Then there's Klarna, perhaps the most cited example of AI-driven job elimination. The CEO boasted that AI was doing the work of hundreds of customer service agents. It became a case study in automation replacing humans. But recently, he clarified something surprising. The company made zero layoffs due to AI. The workforce reduction came from natural attrition after they stopped hiring. So the poster child for AI replacing workers just admitted that AI didn't replace those workers. And here's where it gets even more revealing. Both IBM and Klarna later had to reverse course on their AI customer service experiments. The technology couldn't handle the complexity of real human interactions. They spent fortunes. They cut jobs. Then they quietly started hiring people again because the AI wasn't working. The real reason? A pandemic hangover. To understand what's actually happening, we need to rewind to 2020 and 2021. The pandemic created a strange economic moment. Everything went digital overnight. Demand for tech products and services exploded. Companies couldn't hire fast enough. They threw money at talent. They projected infinite growth. They built teams based on a world that was never going to last. Then the world normalized. Interest rates rose. Investor enthusiasm cooled. The endless growth predictions turned out to be fantasies. And companies were left with payrolls built for a boom that had already ended. So they did what corporations have always done when the numbers don't add up. They cut headcount. But this time, they had a new story to tell. Instead of admitting they made bad hiring bets during a temporary bubble, they pointed at AI and said the robots are coming. It's the perfect cover. It sounds sophisticated. It deflects blame from leadership decisions. And it allows companies to frame layoffs as progress rather than failure. The silent job market shift. Here's what's actually happening to the job market right now, and it's more subtle than you might think. The biggest impact isn't massive layoffs, it's something quieter. Entry-level jobs are disappearing. Companies are simply stopping hiring. Positions are never replaced. Opportunities are slowly shrinking. Between 2022 and 2025, workers aged 22 to 25 in fields most exposed to automation saw a significant decline in job opportunities. These aren't senior engineers being replaced, it's junior analysts, entry-level developers, administrative assistants, the positions where young people traditionally start their careers. Why? Because AI can handle the repetitive tasks that form the backbone of entry-level work. Not perfectly, not even well in many cases, but well enough that companies are willing to let those positions sit empty and see what happens. There's no dramatic layoff announcement, no headlines about robots taking over, just a slow, steady erosion of opportunity for people trying to get their foot in the door, and the reason given is always the same. AI is doing the work, even when it isn't. Why this narrative works. From a company's perspective, the AI layoff narrative is almost too perfect. It makes layoffs sound strategic rather than desperate. It makes leadership look forward-thinking instead of incompetent. And it signals innovation to investors who are hungry for the next big thing. Because today, AI isn't just technology, it's branding. It's the magic word that makes stock prices go up. It's the explanation that makes shareholders nod approvingly. Professor Stephanie puts it bluntly, companies can now position themselves at the frontier of AI technology to appear innovative and competitive and simultaneously conceal the real reasons for layoffs. It's brilliant PR. You look forward thinking. You dodge the stigma of mass layoffs. And Wall Street eats it up because AI is the hottest thing in business. The real story. So what's actually happening? Companies spent billions of dollars on AI technology they didn't understand. Most of those investments failed to deliver any measurable value. Investors are getting restless. Cost-cutting is necessary to maintain stock prices. But instead of admitting they made bad bets and overhired during a bubble, executives are pointing at AI and saying the machines made us do it. It's the perfect corporate alibi. It sounds futuristic. It deflects blame, and it allows companies to present layoffs as a sign of innovation rather than failure. Meanwhile, hundreds of thousands of people lose their jobs. Young workers find the door to their careers slowly closing. And the CEOs who made the bad decisions collect bonuses for their strategic vision. Yale University's Budget Lab recently analyzed labor market data from before ChatGPT's launch through the present. They compared the current job market shifts to previous technological disruptions like the spread of personal computers and the internet. Their conclusion was clear. The AI disruption everyone is worried about is not happening at a mass scale. Not yet, maybe not for a long time. The AI revolution might be real, but right now, it's not replacing jobs at the scale you've been told. What's actually happening is much simpler. Companies are cutting costs, and AI is the perfect cover story. The next time you hear a company blame AI for layoffs, ask yourself a few questions. Did they actually implement functional AI systems before the cuts? Did they invest in training employees to work alongside new technology? Or did they simply announce an AI transformation and start firing people? The truth is, your job isn't being replaced by artificial intelligence. It might be eliminated by cost-cutting dressed up in a shiny technological wrapper. The AI revolution isn't taking your job, but the AI excuse just might. So the question isn't whether the robots are coming. The question is whether we're smart enough to see through the story when it's used to justify something that was always going to happen anyway. The technology is real, but the excuse? That's the part you should be paying attention to.